Ladies and gentlemen, welcome back to another weekly recap. If you didn't see the previous weekly recap, this video is about a recap of all the trades that have been taken in the live session. So if you're new or if you didn't see the live session yet, I want to recall you that every single day, 9:30 a.m. New York time, I will be live on YouTube trading all the New York session, all the stock session. Okay, so if you want to see a real trader going through a real session without hype, without highlights, without marketing, without editing, a real trader through a real session, just subscribe to the channel, hit the bell button, and don't miss the video. If you didn't see any videos yet, this video is about a recap. So every single week we go through a recap of the trade that have been taken live. So this week is about 6th to 10th of July, and we took 4 trades because we traded only stocks. On Forex, we had some setups, but at the end of the day, the setups were not good. Some delivered, but I didn't take it because they were not, within the boundaries of my system, and some we missed. But okay, we got better, it's not a problem. So in this recap, we are going to be covering only the 4 trades that we taken with stocks. And the 4 trades are HIMS, and it's this one. So as you can see, price was just out from an accumulation. This is a trending market. Price clearly paused on a 10 rising EMA, and then we have our entry pattern, our wyckoff simplified, and I got position there. And this is actually what happens. So price, after a moment of consolidation, just exploded to the upside and then collapsed. So this actually was a very nice trade, because when something like that happens, it's not common that price immediately comes back to the break even. So when we have such a strength, usually price continues going up. In this specific case, it didn't happen, and price came back to the break even, and that's okay, because break evens are okay, because the setups was the perfect setup for me, at least for my, let's say, system. And so the only thing that I have to do is to be sure that I am consistent with the application, with the execution of my system. So this was a nice trade, and it doesn't matter if it ended up being a break even. And this is the finale. It came back, so nothing to do. Then we had another one the day after, STUB, and this is another trending market, another clearly pause, this time on a rising 20 EMA, and our actual setup, our always the same setup, our wyckoff simplified. And this will happen. In this specific case, price didn't rise, didn't explode just after the entry. So it was a little bit, let's say, choppy about the entry, and I know, because I know my system, that when something like that happens, when the price is a little bit choppy after the entry, that means that we do not have strength to support the whole movement. So that means that I need to break even as soon as possible, and I broke even, in fact, and it ended up being a break even, because actually there was no strength. And this is the finale. As you can see, boom. So this is what it's all about, about knowing your system. You know what you have to do, you know how your ideal setups look like, and if you do not have your ideal setup because you tested it, you have the case studies, you have the data collection, you have the backtest, you have the forward test, so you have a lot of data supporting your visual. And if you know that something it's not looking like it should, it's better to protect ourselves. And so this is why I broke even, and then look at that. So I already know that when price when I am a trade and price just, you know, doesn't deliver immediately, there is something off. And this, you know, was the result at the end. So the break-even was a nice choice. And then we have the winner of the week for R, the BCRX. Trending market, price just out from an accumulation. Really smooth. In this specific scenario, it was a longer pause, as you can see, but a smooth pause on a rising 20 EMA. Always the same setups, our simplified wyckoff, and then this is what we got. This is what I was talking you before earlier in the previous trade. I know that when price just doesn't go after my entry, okay, and comes back, there is something off. This is why I break even very fast. Look at that trade. This is one of the trades that actually delivered, okay? There is no comeback. Price, there is a lot of strength, and price just can't come back. Just goes forward, okay? Just continue going up. And actually this was a nice trade. I had to close the trade here because of the market close, because it took very long to complete the trade because of this overall let's say a reaccumulation that we had here. So it took a long time, but actually yes, I had to close it at 4R. So I manually closed it because the trade, the session was about to end. And then this is what we got at the end of the session. So actually closing it here, we missed this one, maybe 1 hour, okay, but it doesn't matter, okay, because that for me was perfect, because I know that in other situation where we have a faster moving market, I know that I can get to my 1 to 7. That it's my average risk reward. That I saw that my trades on average reach 1 to 7. So this is why I have 1 to 7. Sometimes it happens that the trade is lower, and so I need to close it manually before the market close, and so the risk reward is lower. But it is what it is. It is a 4R win. So we are very, very happy with that. And then we have the last trade, Zeta. This is just not clean, okay, not clean as the other, but price was just out from an accumulation. I could have avoided this one, but at the moment of the trade, it actually looked good, okay. We had strength, we had a very nice pause on the rising 20, we had price that was just exited from an accumulation, and so I thought that, you know, it was nice to try to trade it. So actually this doesn't look like the other, especially the context, but actually to my eyes it was a real good one. And this specific situation lets me introduce another concept, that when you're profitable, then when you know what you're looking for, your setups will not look exactly the same. And this is important because as your understanding grows, it grows the price action, it grows what you understand about the price action, and so you are willing to take setups that could be different from each other. But actually the understanding, the principle behind these trades is always the same. That happens because obviously you start trading a pattern and you need to be consistent with that pattern, but as your understanding grows, it grows also your confidence and your overall knowledge of the market. So this is why you're willing to take setups that maybe are not ideal, okay, but this definitely could be avoided. But it doesn't matter because the pullback, the pause was the right one. It was a smooth one. The clean, the sell-off, sorry, was clean, and then we had our entry. Always, always the same. Every at the end of the day, every single trade is the same. and then we, as you can see, we just got top in when price was here, that I saw this strength. So let's say this high, I just moved to break even, and it was a nice, very nice move, because it just, you know, dropped lower, and it took me out for a small loss because we had a little slippage, but it doesn't matter. And that what happened, it was a stop loss. So actually it was a good call, the break even. Again, it's not that I am a magician or that I can forecast market. It's just that I know my system, I know my setup, and I know when a setup looks good, you know, to hold the trade, or when a setup doesn't look good and I can't hold the trade, and it's better to protect my capital or to close it manually. Okay, so this basically was the whole week, a 4-hour week, nothing crazy, because we have a slow market. We are experiencing, especially in stocks, a slow market because the QQQ is in a range. It's not really moving, and so usually when QQ is not moving, we have less assets that are moving, that are delivering, and that means less action that you can trade. So basically every single session you have 1 or 2 assets that might set up, and at the end of the day they will not set up, because this is the norm, you know, the normality. And when you are lucky, you have something setting up. And actually this week we have been lucky, because despite the fact that the QQQ is in a consolidation, so really nothing is moving, we had 4 trades out of 5 days. So every single day we had a trade, and this is actually not something common, okay? But yeah, I'm grateful for that. 4R, it's what market gave us, and it's okay. There was no mistake in the execution, and this is important because all the other trades were within the plan but didn't deliver, so there was, you know, any mistakes in the execution. So really 4R is what market gave us, and we were happy to take it. Okay, so what I want you to remember from this live, basically always the same thing, but I really like to repeat: be consistent in your execution. And to be consistent in your execution, you need to know your system. To know your system, you have to go through a process, and the process is that you have to learn your system. This is fundamental. Then you have to understand which pattern, you know, do you want to trade, and you do that by case studying. So you go back on price action where price delivered, when actually it was a good context, or it depends on your system, what you're looking for. So after you learn your system, you know what you actually have to look for. So you go back in price action in every single asset, and you look for, let's say, environment that was good for your strategy. And you start understanding and seeing what pattern you have to trade. And then you need to collect images about that. Okay, so collecting images, you mean that you have to get your eyes trained to see the setup, and then you have to understand the data behind your system. So every single time that we have a setup, so the condition is is ideal, every rule, you know, is met, and things on. What actually happens? What are the stats? So the risk reward, the average win rate, the max drawdown. You need to know these things, and then you have to test through the back test. You have to test if your, you know, understanding is actually good, if it works. And so you start using the replaying function on TradingView or any other tool for the replay, and you start playing candle by candle, just trying to understand if you were able to trade it. And if the backtest results are good, you go on the forward, or the forward, it means just live but paper trading, or on a small account. So basically you stay there and you start experiencing the worst variable for a trader, that it's time, because in backtesting you just click the mouse and a candle prints. In forward testing, you actually need to wait for the trade. So maybe you need to wait 2-3 days before taking a trade, and that forges you as a trader because it makes you understand the importance of waiting. Okay, that is paramount. And if the forward testing is positive, then you can go live. So this is the process you should use, and the fact that you are consistent in the execution, it's the basis to let you apply this process. Because if you're not consistent in the execution, you are basically trading every trade a different system, and if you are trading every trade a different system, you can't be consistent, you can have data, because basically every trade is a different system. And so at the end of the day, in the long run, especially at the beginning, that will ruin you. Okay, so if there is one thing that you have to remember, is apply the process and be consistent when applying the process. So thank you for watching, guys, and we're going to see again in another video next week with a recap video, and in another video with something interesting that I'm working on. So make sure to follow the channel, make sure to drop a comment, make sure to ask a question, whatever you want. I will be there to answer you as soon as possible. Thank you, guys.